A couple of major issues are emerging which will make agribusiness headlines over the next few days. And one relates directly to the theme of foreign investment we've highlighted on today's program. It's been confirmed that a major Chinese company is targeting Cubby Station in southwestern Queensland. Cubby has a colourful history, but there's no doubt with lots of water and good prices it would be a very, very attractive investment for any agribusiness. The issue, of course, will be should Australia be selling its prime agricultural land to foreigners. Cubby Chairman Keith DeLacy says a foreign sell-off is unnecessary as prospects for Cubby are very strong.
You know, I've always said that we could trade out. We've got 2 years of water on site, but the seasons have changed. We've got, we could look forward to 5 to 10 years of full production.
I reckon we can expect to hear a lot more on Cubby. Now, the other emerging story is in the far north, where the live cattle quota issue appears to be clearer, at least in one sense. Indonesia's President Susilo Bambang Yudhoyono will visit Darwin this week for talks with Prime Minister Gillard. The tip is both leaders will announce the quota, and it's likely the remaining 98,000 head will be wrapped into the September quarter, with negotiations to continue on numbers for the latter part of the year. The North will be holding its breath. A couple of interesting property sales are scheduled in the Territory for this week, and anything less than an indication the live trade is heading back to past numbers will put another spear into what those properties are worth. Prices on live exports, there's some buying, but the anxiety is growing by the day. Now, Meat and Livestock Australia is very good at keeping statistics, and their latest offering is again full of interest. First, our beef production, how much it's worth and where does it go. Here's the top 5 export destinations and the value. No surprise, Japan on top, 1.6 billion. Korea is next. Now, that's in front of America, which is all about quality rather than quantity. Russia is getting a more interesting market week or year by year, and Taiwan down there at $196 million. A couple of countries not on that list are worth a mention. Indonesia is up to $171 million. Chile, remarkable, selling beef to South America, $81 million. And a country we talk about a lot is way back at just $59 million, and that's China. MLA has done a similar graph for lamb. Here's the top 5 destinations for Australian lamb. America has been on top for years, so that's no surprise. Next, the United Arab Emirates. There's China at $79 million. That's pretty good. UK 66 and Japan at $64 million. A couple of countries not on that list include Switzerland with close to $39 million and Papua New Guinea with $34 million worth of lamb. Now, let's start the check on prices with lambs, where there's a real numbers game. Supply has been dropping all year, especially in the west, where restockers are very active, while in the east, big numbers are bypassing sale yards and going direct to processors. So the national indicator has gone up a fraction, while sheep numbers were also down, giving mutton a bit of a lift in price. Elsewhere in the yards, the cattle market saw mixed trading. Cold and wet conditions were reflected in both the numbers and the quality on offer. Nationally, numbers were down 24% on the previous week. Trade steers had a big lift, recapturing some of the recent losses. Cows were firm, and there was keen competition for any of the better lines on offer. Now, this action left the Eastern States Young Cattle Indicator at $3.76 a kilogram. Turning to grains, and what a week. Prices everywhere going up and up, all on the back of big drought problems in America, southern Russia and Kazakhstan. And where there will be a crop, early indications are yields will be way down. Let's start in Chicago, where corn had a massive rally, mainly because of those yield issues. Wheat, canola and soybeans followed. American wheat stocks are reported as down more than 15% year on year. Australia followed, with the ASX reporting strong support across the board. That good rain in the east would have helped as well. 30 to 40 mils of drizzle over 3 days is just about perfect for new crops. Spot prices marched upwards in step with the futures. Wheat jumped $28 and sorghum bounced $22, while canola lost a fraction. Back to New York now for the soft commodities, and cotton continued its slump while sugar has surprised. Sugar went up despite some positive production reports out of Brazil, while cotton suffered after a massive contract cancellation. But the bulls are said to be watching cotton very, very closely. And that's the Landline check on price.